Whether you live in an apartment building, a condo, or a planned neighborhood, you're part of a community. And behind the scenes, there are all these rules and systems meant to protect everyone. But let's be honest, how often do we really look at the blueprint for how it all works? Well, today, we're going to pull back the curtain and demystify the governance that keeps your community running safely and smoothly. Just think about it for a second. Your home is probably the biggest, most important investment you'll ever make. You have to trust that your maintenance fees are being handled the right way and that the property is secure. But what's the actual guarantee? What system is really in place to protect that huge investment from problems you can't even see? All right, let's get into it. Because as great as community living can be, it's definitely not without its risks. And these are the kinds of common worries that can really keep homeowners up at night. First up, the big one, the money. You pay your fees every month, but where exactly does that money go? Is it being spent on what it's supposed to be? And are they actually saving a slice of that for the day the roof inevitably needs replacing? Yeah, the fear of mismanaged funds is very, very real. And then you've got the nasty surprises. I mean, what happens if there's a huge, unexpected repair and the association just doesn't have the cash? Are you suddenly going to get hit with a massive bill out of nowhere? This concern over hidden liabilities, stuff the community owes that isn't on the books, is a huge deal. And finally, there's the human element. The management committee is usually made up of volunteer neighbors. And while most of them mean well, without a really clear set of rules, how do you make sure their decisions are transparent and fair for everyone, and not just for a handful of their friends? So, how do we solve all this anxiety? Well, you don't just cross your fingers and hope for the best. You put a plan in place. A formal, solid system designed to create clarity and security for everybody. And that right there is where a risk governance framework comes into play. So what is this thing exactly? Well, think of it like the constitution for your community's operations. Its entire job is to protect homeowner assets, make sure the management is totally transparent, and draw crystal clear lines of accountability for that volunteer committee. It's the official rule book that everyone agrees to play by. And what are its main goals? Okay, first, the obvious one, protect your property and your money. Second, to guarantee management is open, honest, and follows the law. Third, it sets clear standards for how much money needs to be in the bank for future projects. But here's where it gets really interesting. Look at the last 2 points. It actually protects the volunteer committee members when they act honestly and in good faith. But, and this is so important, it also holds individuals personally accountable if they mess up. It's a perfectly balanced approach. Okay, let's follow the money. Because let's be real, for most of us, this is the most critical piece of the entire puzzle. How is the association's money handled? How is it tracked? And how is it protected? Now, this table shows a core principle of financial safety. You cannot mix the money. The framework demands that funds for different things be kept in totally separate buckets. The money being saved up for major repairs, the sinking fund, can't be dipped into to pay for, say, landscaping. In fact, any interest that money earns has to go right back into that same fund. The simple rule of keeping funds separate prevents so many potential headaches. This phrase up here might look like some boring accounting jargon, but trust me, it is an absolute powerhouse. It's a legally significant statement that an independent chartered accountant has to make after they audit the books. It's basically your ultimate guarantee that what you see is what you get. No nasty financial surprises hiding in the shadows. So how does this actually work day to day? Through simple, practical checks and balances. For example, any big payment needs 2 signatures. The bank statements have to get a second set of eyes on them from 2 different committee members every single month. They even have to physically go and verify that the big ticket items, like elevators and generators, actually exist and are in good shape. And every few years, they bring in pros to do a reserve study to make sure they're saving enough for the future. All right, let's switch gears from the money to the physical building itself. Because, a healthy bank account is great, but making sure the place you actually live is safe and sound, well, that's everything. The framework basically mandates this multi-layered shield of protection. It requires comprehensive insurance, and not just for fire, but for things like floods, earthquakes, and even liability if someone gets hurt in a common area. And it's not a set-it-and-forget-it kind of policy either. The coverage has to be reviewed every few years to make sure it's enough to rebuild today. On top of that, you've got mandatory annual structural and fire safety audits, plus required safety certificates for elevators and stuff like that. It's all about being proactive, not reactive. Okay, this next part is really smart. It's how the framework handles accountability.
See, it's not just about punishing people. It's about creating a system that encourages good people to step up while having very clear consequences for bad behavior. It's a total two-way street.
And this right here shows you that balance perfectly. If you're a volunteer on the committee and you act honestly and within the rules, the framework protects you from personal liability. This is crucial. It's what makes good people willing to volunteer. But that protection vanishes if there's any fraud, misuse of funds, or if you intentionally break the law. In those cases, you're on your own, personally responsible. It's fair, it's clear, and it has real teeth.
And accountability needs transparency, right? But that can't just be a vague promise. So the framework sets up a formal communication charter with strict deadlines. For example, you have a right to get the annual financial reports at least 2 weeks before the big annual meeting. You have a right to see the draft meeting minutes within 14 days. And if you file a written complaint, they have to acknowledge it within a week and give you a real response within 21 days. These aren't just suggestions, they're your rights. So we've got all of these rules for money, for safety, for accountability, but what's the ultimate mechanism that makes sure it all actually happens? What's the final guarantee that holds it all together? Believe it or not, this entire system, all the checks and balances, all the rules, it's all enforced and guaranteed by one single standardized document. This thing right here is the master key. It's a special auditor's certificate. At the end of the year, the independent auditor doesn't just check the math. They have to go through this specific checklist and certify that everything is in order. Are the funds separated correctly? Yep. Is the insurance valid and for the right amount? Check. Are the big assets verified? You bet. It protects homeowners with an independent stamp of approval. It protects the committee with a legal shield showing they did their job. And because it's the same format every time, it guarantees that same high standard year after year after year. And really, that brings us to the whole point of this explainer. All of these rules and audits and charters are designed to build just one thing: trust. Trust that your investment is protected, your home is safe, and your community is managed fairly. So I guess that leaves us with one final crucial question to think about. Does your community have a clear blueprint for trust?